Iran is not a new issue. We've been talking about it for as long as I've been in the business.
That comment is hyper hawkish.
It is hyper hawkish, and it appears the market has become a bit callous to some of Mr. Trump's tweets, just by the reaction itself. I am a bit surprised that the market isn't, more negatively impacted by such a threatening remark. But there's been a lot of them from him, and I think that means that we're looking at a bit of a sideways market. It's really not reacting to a lot of news here. We've had a lot of tweets, we've had a lot of bluster, we've had a lot of things from China, North Korea, Iran. I mean, what's going on in Venezuela? You don't even hear about that sort of back page news almost. So the market's a bit numb to these things. And
is that simply because there is this general feeling that longer term things are still pretty good, and that our viewers out there and institutions out there are not changing their stock allocations merely because of a comment here or a trade fight there? People aren't stopping allocating to their 401k because of those comments.
They're listening to their advisors and sticking with their plan, just like we do in our trading strategies. We stick to the strategies. These short-term blips, you can't anticipate them and you can't react to them unless you're day trading and reacting to news as part of your business model, which is not what we do, and I don't think that's what most investors out there in the world are doing.
Well, you gave us good advice in December when everything was going haywire, right, and the markets were collapsing. You said stick with it. The markets have come back. We've had one of the best starts to a year, mainly because we rebounded from December. I get that.
Correct.
Ever. But the seasonality period that you always talk about seems to be coming to a calendar close.
They wrote it off last year. We have a technical signal using MACD on May 1st, which is not usual for sell in May, even though we don't really sell in May. We reposition in May. You look at the charts of the average performance over the 6 months, May through October, it's chop and flat, and you don't gain a lot of ground, and it's not like it has to be negative, and that's not what the worst 6 months are.
You got to put a dollar in the jargon jar. It's 505, MACD, moving average convergence divergence indicator. It's a technical thing.
Technical timing indicator.
So here,
shift in momentum.
We need the jargon. Here we go, though. So what do we buy and what do we sell right now, given all the macros that are going on?
Our positioning is we got out of our Dow and S&P trades, or the ETFs, the spiders and the diamonds, holding on to NASDAQ. And
you're out of the Dow and S&P?
Just in the seasonal switching strategy. So, there's other places that we remain in. The probability strategy changes every day. But in the newsletter portfolio, we're out of the Dow and the S&P, holding on to NASDAQ and Russell, because their best 8 months goes to June, getting rid of financials and industrials and materials and transports, hanging on to healthcare and utilities, and picking up some staples. All of our stock positions are on hold. We will be looking for a defensive basket once we get our seasonal sell signal for NASDAQ in June, and then we'll get even a bit more defensive for those weak summer months you can see on the charts. August.
So you think tech still looks pretty good here?
I think tech still looks great.
You're staying in the NASDAQ.
Yeah, tech is the future of the world. It still looks good, and seasonally it has a longer run than the industrial stocks.
What about the election?
Also some bonds. By the way, also some bonds.
Okay, you're selling bonds or buying bonds?
Picking up a couple bonds for the worst 6 months.
Treasury bonds or corporate bonds?
AGG, the total core bond index, and the Vanguard bond index. So a combination.
So you're not worried about all the debt issuance out there and some of the high yield nervousness?
It's a place to park cash. You get a little yield while the market chops over the
Quickly, election seasonality. We're in that third year of a presidential cycle that you talk about so much.
We had almost all of the average gains for the pre-election years already, which tends to take a bit away from the rest of the year, even though second halves after strong starts like this, top 20 strong starts, still up about 7.6%.
Well,